Hi, this is Alkemy with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 20th of April. Starting off with the FTSE 100, where we've ground to a halt, luckily at the better levels. So basically, the old support on the way down in February was around current levels, and we're hanging around there now, 78, 90, 7900, that sort of area. Got that broken February resistance line there around 78.30. That's first support. And the rising 50-day line, 77.70, is probably the worst we are looking for on the downside at the moment. On the upside, looking for that end-of-day close above 79.30 to give us a retest of February resistance at 8,000 plus, and best case scenario at the moment up to 82.50 plus by the end of next month, although exactly what would cause that remains perhaps a bit of a mystery. Moving on to the DAX, which has been that much stronger than the FTSE in the recent past, still above, just above the old 15,700 February-March resistance zone. Above that, then we're still looking for the top of that rising trend channel from September as high as 16,500. Otherwise, if we break back below 15,700, then there's the risk of a test of the 50-day moving average, 15,400, and maybe even a bit lower down to the floor of that channel. But so far, the DAX has done reasonably well, today's fall notwithstanding. Moving on to the Dow, and here you can almost guess that this market hasn't been able to get through that one-year resistance line. 34,100, the level there. Above that, we're looking for the top of the rising trend channel from late August as high as 36,500 by the end of next month, or maybe the month after. If we can't get through that line from last year, then it looks like another test of support around 33,000 and the 50-day moving average. But ideally, we don't go much below that, if at all. On to Bitcoin, we're still waiting for a break of 32,000 if we can. So far, we've retreated from near there, so we went up to we went through 31,000, but at the moment, bit of a bull trap situation. So resistance prior to that little break higher this month around 29,000. We've got the risk of a test of the 50-day moving average at 26,700 if we don't close above 29,000 over the next day or two. On to the stocks, and quite a decent bunch today. Alkemy the first, up 12% on an update from the company. We had the shares bear trap from below the rising 200-day moving average. That's around £1.80. Above that, we're really looking for the shares to hit the top of that rising trend channel from July as high as £3, maybe by the end of next month. The only stumbling block is that we have the 50-day moving average there, which has so far blocked the share price today. So an end-of-day close through 220 is would be the trigger for a move up to £3, hopefully by the end of next month. And the upside value is at least while we hold above that rising 200-day moving average. Moving on to a stock which had big news today, not necessarily big for the share price, which is perhaps a bit disappointing, but we're up nearly 5% on Arc Minerals. The big breakout here was the break of that one-year resistance line there around 4 pence. Above that, we're looking for 6 pence, whether the shares are slow to move or not. And the upside value, while we hold above 3 3/4, basically the 50-day moving average. On to Caracal, which is continuing to look like a much more steady ship of late, up 13% today. We've got a rising 50-day moving average, which means we're really looking for 0.6 pence in the 200-day line, while we're above the rising 50-day line at 0.32. So ideally, there's no pushback below the mid-0.3s, and we've already had, 3 bounces off the neutral RSI 50 level, which tends to be a very good continuation signal. Let's see if it works this time. Onto a stock which had a great update today, and the shares have responded in kind. From a technical perspective, perhaps arguably even better than the news, in the sense that we've had bullish divergence going into the gap higher that we've had, so it's a bear trap gap reversal. We've got a resistance line there, which is the top of the triangle from December, which is 0.17. We're looking for that over the next 1 to 2 months, especially if we can get a decent end-of-day close back above the 0.09 pence level. which was the old January support. So above 0.09, looking for as high as 0.17 on DG Innovate, backed by that bullish divergence with the lower lows for April, but higher RSI trace. On to Dekel, which seems to be slowly improving, in fact, quickly improving today, up 14%. Here you can see that we've had 2 or 3 attempts to get back above the 50-day moving average. That looks like that's going to be successful on this occasion, above the 2.3 pence level, looking for 3.5 as soon as the end of next month at the top of that broadening triangle from December. Moving on to a stock which I know a lot of people are willing higher at the moment, First Class Metals. Here we've broken a line of resistance there from back in December. And we're also toying with the 50-day moving average. It's got the 200-day line rising, so really we're expecting a move to the upside. If you're a fan of the shares, you're probably looking for the shares to progress within a rising trend channel like the one I'm drawing at the moment from back in September. All that's missing now really is an end-of-day close through the 200-day line, 13 pence, to give us a 16 to 17 pence target by the end of next month. But it looks as though we had a sort of a double bottom off the 10 and 3/4 pence area and a bear trap effect as well. So hopefully the shares will build on the latest gap higher and push up towards that 16 to 17 pence zone while we're above 11. On to a stock which never ceases to cause amusement. You can look it up why, perhaps. But here we've got Futura Medical bouncing off the floor of the rising trend channel there. Above the 50-day line at 49 pence, we're looking for 70 pence as soon as the end of next month, which would be quite a result, given how long the shares have been consolidating over the recent past and after that multiple resistance there, which was in the mid-50s. So hopefully this time we'll get through that and head to 70p over the course of the coming weeks. Great looking chart pattern at the moment is Greenroc Mining, and here we've got this saucer-shaped reversal. We broke the neckline there around the 3.5 pence level, and above that looking to fill the gap up to 4.5 pence as soon as the end of next month. Bullish divergence line there as well. All that's missing, maybe if you're cautious, it would be an end-of-day close above the 50-day moving average around 3.8 pence. And then you would justifiably be able to target 4.5 pence. On a bigger picture situation, we've got this broadening triangle from August last year, so the top of that triangle there, up to 6.5 pence, but that's maybe something for the summer. On to a stock which also might be finally ending its recent consolidation, Harland and Wolff. Here the picture looks a little brighter with a break of that resistance line there from back in November and the 50-day moving average as well. So call that around the 15 pence level. Above that, we're looking for the shares to progress within a broadening December a triangle as high as 26 pence, perhaps by the end of June or sooner. Moving on to the biggest climber of the day to date, Ondo, Tech, which has delivered the goods, unfilled gap to the upside after the consolidation and that we had for much of the last year. In fact, current situation is that we've broken the what was the original target there, around 11 pence, and we've got a fresh target there up to the upper parallel of that resistance line there from last July, so up to 19 or 20 pence by the end of next month. And the way things are going, maybe by the end of this week. So well done to Ondo. Oriole is next, and here we've got a situation where we've got that broadening triangle from the summer. Want to break through the 0.19 level, hopefully head up to the top of that broadening triangle from July 0.26 by the end of next month. Finishing off with Power Metal, and here you can see that the shares have delivered well after that bear trap, that brief bear trap last month below the 0.7 zone. We made decent progress since then, probably heading towards the main resistance area for the shares up to 1.6 pence on a 2 to 3 month view, but I think we're targeting the rising 200-day moving average at 1.25 pence over the next 3 to 4 weeks while we remain above 0.9. That's it from me today. More updates tomorrow.